Again, that's good on one hand. We had a lot of people employed in manufacturing, well-paid jobs, pays far higher than the average for business. But that's how we dealt with productivity. We weren't necessarily making the investments in technology, in innovation that would allow us to be productive as we move forward. And then when you saw the crash, we lost hundreds of thousands of jobs, and now we're even in a tougher battle for that productivity challenge that we have to deal with in the global marketplace. We can't ignore it. The dollar was a great advantage at 68 cents, 65 cents in the 1990s. It gave us a competitive edge that we no longer have. I think the dollar's at 97, almost 98 cents yesterday. We're expecting it to be around par for the foreseeable future, so we won't be able to rely on a low dollar as we move forward. We have to deal with productivity. We have to deal with our competitive advantage far differently than we did 10, 15 years ago. So the recession hopefully is over. We're experiencing a recovery, but it's not just going back to normal, the old way. We have to reset. We have to rethink, recalibrate, and reassess how we move forward. And there's still several risks out there. One of them is dealing with sustaining the recovery. There's been a lot of stimulus support around the world, $1 trillion in the U.S., billions and billions of dollars in Canada. It's allowed us to work on a lot of projects. Some were mentioned earlier this morning, and we see that around the province. It's helped get people back to work. We have traditionally been advocating for balanced budgets. Don't use deficits. Be financially responsible as a government. Although things were so challenging last year, we supported the government moving forward with stimulus funding. We thought there had to be strategic investments made to get the economy going. Otherwise, we would be even in worse shape, and the economy would suffer even more. So these are some of the challenges that we're dealing with: the default of debt, asset bubbles. Currency management companies are having to do more to hedge funds, hedge opportunities. The bond market is still extremely volatile. A lot of people don't know what to do, and a lot of advisors don't know what to advise. And as I mentioned, the stimulus package, it is coming to an end. There won't be the trillions of dollars spent over the next year or two. There will be the completion of some of the projects, still billions of dollars that will be coming into the economy, but not to the extent that there was over the last year. So where will that leave the economy if the governments aren't pumping in billions and billions of dollars? Another obstacle to the recovery, again, is the volatility of the currency. The Bank of Canada has indicated that it is going to increase interest rates. I think the inflation numbers were out this morning, or coming out this morning, and they're lower. Doesn't give the Bank of Canada a lot of latitude. The United States is not increasing its interest rate, so we have to take all these things into account. One of the key challenges our members told us a couple of years ago was they can't get access to funding. They can't get access to capital. It's been a real challenge for them to deal with accessing funds. So the government had to look to ways how can they help out, and that was the stimulus package in some degree. We also hear from our members, particularly if they're multinationals, particularly if they're American, about the overcapacity in the North American marketplace, and we saw that in the auto industry. I think 3 years ago, 4 years ago, the auto sector in North America was geared to about 18 million units they were producing, which was far higher than what you would have expected if you look at traditional output for automobiles. But 2 years ago, it was down to 9 to 10 million. So there was huge overcapacity, and that's where we saw companies closing manufacturing auto plants, the re-entrenchment of what was going on with the Detroit Three, the traditional Big Three, now called the Detroit Three. Even the Honda and Toyota that had done better than most had closed lines, lost shifts as the auto sector dealt with the overcapacity, not just in North America, but globally. We also have to deal with global mandates. We do all we can to get a world mandate in our facilities here, and I think we've been successful, but when you lose that world mandate, the plant doesn't have a lot of other lines to rely on. So it's a real challenge and a reality that we have to deal with. export markets. We have to continue to access export markets to look for new market opportunities. And that's what we're trying to deal with, as well as to continue the advocacy role that we deal with, continue the advocacy that CME has been doing since we were created about 140 years ago. But our members are expecting more from us now. They say, you're doing that as a given. What can you do to help me deal with my bottom line challenges? What can you do to help me expand my markets, to increase my business? So we're looking at what that role is, that expanded role for CME is. We're taking that seriously. We as a trade association have to be customer focused and try and focus on how we can help our members be more and more successful. And one of the areas that we're finding has a great deal of resonance is in the area of energy. Not only with the Green Energy Act that was introduced 12 or 18 months ago, what about new markets in other parts of the world for energy? We did some work with the Ministry of Economic Development and Trade to let people know about opportunities in the oil sands. As one example, we started that 3 or 4 years ago. $150 billion worth of economic expansion in the oil sands. We put together some trade missions with MEDT to take companies to Alberta, to Edmonton, to the oil sands, to look at those opportunities, to allow them to make relationships to access some of those investments that were being made. And it was a very successful program. When oil fell from $138, $140 a barrel down to $35, it did slow down, but the long-term expectations are that energy prices will rise, and we're seeing more and more of that investment picking up. But dozens and dozens of our members were able to get access to the oil market, to the oil sands opportunities through the program that we partnered with MEDT. And we're trying to expand that. And this year we had what we call our Energy Connections Conference, which talked about energy opportunities into the supply chain, global supply chain, but particularly the smart grid into the United States. Billions and billions of dollars of upgrades have to be done to the grid, both in North Canada and in the United States. Wind, solar, biofuels, all these are new opportunities that our members are looking at. Even with the solar, companies are looking at how can we increase our revenue stream by putting some solar panels on the roof and feeding our production into the grid. I mean, we're paying 6 to 9 cents a kilowatt hour. If we put the panels on our roof, we can get 80, 90 cents a kilowatt hour back. So it's an opportunity that companies are looking at. And other companies are saying, well, how can we manufacture, get into that supply chain to produce solar panels, to produce wind turbines, and what exactly can we do? We were planning a small event in Burlington, ended up having 350 to 400 people come out to find out about these opportunities. Some were just kicking tires, some were just trying to build their awareness around those opportunities, and others were there hoping to make some connections so that they could move forward a lot more collaboratively, a lot more quickly. And again, a lot of obstacles to the recovery, but there's also a lot of opportunities that we're trying to make sure our members are looking to and aware of. We take that role very seriously. Again, the structural changes that are taking place, customers' expectations are much more pointed. They expect a lot more from their suppliers. Corporate restructuring, supply chains, globalization. Again, I don't have to tell people in this room, you're dealing with this every day. These are challenges that you're dealing with. As I mentioned earlier about the skill shortages, we're going to see a mass exodus from the workplace, probably not as quickly as people were forecasting a couple of years ago, but over the next 10 to 15 years, we're going to see probably between 50 and 60% of those currently working get ready for retirement. Whether they leave completely or they slow down, there is going to be a huge shift in the workforce, and our birth rate isn't enough to sustain the workers who are leaving now. We're relying now for skilled workers to a large extent on immigration. We have to ensure that we do all we can to have an education system and an infrastructure that's allowing young people to know what the opportunities are and to educate them and to give them the skills that they need to be successful. And that's, again, why we're collaborative and we work with other organizations like Skills Canada. I'm not sure if you're familiar with that organization, but it promotes skills as a first-choice career opportunity for young people. It does probably 2,000 in-school presentations a year. There are regional skills competitions, there's provincial skills competitions, and then it culminates in Canada in a national skills competition. And last year in Calgary, the World Skills Competition was held, and that brought countries, 40 countries from around the world over to compete for who was the best carpenter, who was the best auto mechanic, who was the best pastry chef. Great opportunity to raise the profile and allow, particularly in Alberta, students from all the schools to get out there. I think they had about 150,000 young people, students, go out and look at and experience that skills competition. Energy constraints and environmental priorities, those are key areas that we hear about from our members. I talked about the energy opportunities, but there's still key challenges around the energy policy. What's the cost going to be? What is the policy going to be? We were dealing with an open market. We were dealing with a closed market. We're dealing with something called the Global Adjustment Mechanism, which was put into the system a few years ago to hedge against increasing rates. The rates didn't increase, so this Global Adjustment Mechanism had the opposite effect, and it's actually increasing people's costs much more considerably than what was planned. We had a meeting with the Minister of Energy recently to highlight, well, we thought there were some changes needed in this Global Adjustment Mechanism. The company was a large manufacturer, and its energy bill was in the tens of millions of dollars, but the Global Adjustment Mechanism was a $20 or $30 million charge they had to pay when the company's profitability was only marginal, a few million dollars. I think the Global Adjustment Mechanism was probably 10 times more, 20 times more than what the profit of the company was. So huge challenges around energy, huge challenges around the environmental issues. We hear that probably more than any other area are the challenges around environmental bureaucracy. Second would probably be health and safety, workers' compensation, Ministry of Labor inspections. A lot of challenges. Companies, after dealing with the worst recession in 75 years, feel that government doesn't necessarily understand the challenges that they're dealing with because of they're out of touch with the reality, out of touch with what they're dealing with. So what we're trying to do is make sure government does understand the bureaucracy, those challenges, and focus on not getting rid of standards, but getting rid of the burdens, the red tape, and focusing on what the risks are and what the results are that we want. As we have to make the point, business is, as usual, is not the way to go. It's not an option if you're going to be successful. We need leadership. We have to talk about new strategies. We have to talk about how we implement, how we execute. There's going to be a lot of pressure on cash flow, on managing your cash if you're going to be successful. Productivity. The Premier was talking more and more about productivity, how they have to deal with that, how the province has to deal with that. And again, that's not something that the government can deal with. They can have a role, but again, that's something that they have to work with us to collaborate with us on. And there's a lot of opportunities, but we really have to do more than just talk about that. There's also the lean opportunities. Many companies are dealing with lean. Probably companies in this room have been focusing on how they introduce lean, how they're dealing with productivity improvements, looking to new markets, the supply chains, how can we deal with logistics differently, and again, getting back to the basic HR issues, human resources, workplace competencies, achieving results through a workforce and continuing to invest in that very important result. We're talking a lot about what are the success that we need from government, and again, it's investing in people, it's investing in training, and it's working with us as a real partner. And again, it has to be actioned, it has to be something that we can measure, it has to be something that really means something. We've seen the government be a lot more receptive than they have been in the past, particularly in Ontario. They did listen to what we had to say. We had told them our number one issue 4 years ago, 5 years ago was capital tax. Why are you taxing capital? We should get rid of that. And they agreed, and they moved to eliminate the capital tax. In fact, they gave a rebate in 2008. So hopefully the manufacturers in the room realized a rebate for the capital tax that they had been paying. They've been lowering the corporate tax rates, another priority of us. The HST is something that we've been pushing for a long time. We thought that that was a much more effective tax mechanism. We still have some issues with the way they're doing it. It's not perfect, but I think the direction is right. And it was a bold move the Government of Ontario and the Government of BC made to introduce HST. Accelerated depreciation, both federally and Ontario, they've dealt with that. We'd like to see that permanent. I think as they set to expire in 2011, 2012, we want to see that continue, which would again be another asset, another way that the government can help manufacturers to get through and to rebuild during the recession.